pleasure to be here today on the panel. Thank you for inviting myself, and on behalf of Bank of Hawaii, I'm so pleased to be able to share with you some of the things we're doing with our workforce housing initiatives and the employers that we support. From a bank perspective, or as a lender, you know, it's a win-win because it's a chance to partner with key employers out in the community statewide. And it's also a way for us to acquire new customers, which is big business for us banks, and to get them to be lifetime members of our banking ohana. Because as we see, those individuals grow to be families, and they then tend to have multiple products with the bank. So we're very interested in partnering with these key employer groups. And then needless to say, it's a support to the community. We always are looking to participate in Community Reinvestment Act and have initiatives that support the low to moderate income median ranges. So for the lender, we're there. If employers are willing to talk to us, we're happy to put things on the drawing board for them. Forms of employer assistance, as Darlene mentioned, with down payment assistance, closing cost credits, direct, fully repayable second mortgage or unsecured loan. Sometimes there are forgivable second mortgage loans or unsecured loans. And employers can consider deferred payments, second mortgages or unsecured loans. And then of course, some will be willing to support their mortgage payments with housing subsidies. Right now at Bank of Hawaii, we are working with some employers that are willing to guarantee a second mortgage piece on the whole transaction. So basically, it's up to 97% financing, only 3% down. And this is working really well. It avoids mortgage insurance for the borrowers, and in some cases, they are given more borrowing power because of it. Closing cost assistance is sometimes thrown in, depends on the employer, and that, of course, helps the borrower get into their home so much quicker. I think all the realtors out here will agree to that any kind of closing cost credits will help. And then the down payment assistance we talked about earlier. So depending on what the employer is willing to do for their employees will kind of shape the program in itself. I see a lot of friendly faces out there, so this is real easy math for them. Based on a purchase price of $500,000 and a first mortgage of $400,000, basically the second mortgage piece, which is Bank of Hawaii loan that we will do at a discounted rate, in addition to the discount on the first mortgage loan, would be $85,000. And so the down payment, excluding closing costs, is just merely $15,000, something attainable, I think. And if you compare that without the assistance from the employer, we're looking at a big difference, $85,000 difference. So that's if they just came in with a standard 20% down. Now I know all of you know that there's mortgage insurance out there as well, but if you remember a year ago to get mortgage insurance, it was not easy. And we're happy to say that now the insurance guarantee companies are getting a little bit more relaxed in their guidelines. So what happens is sometimes we actually, show the employee a different course as well, and they don't necessarily use the program that the employers are offering on the table. The bank participates by helping with the development, bringing to the table the expertise and the knowledge of what the employer can or cannot do. What kind of, how do they fashion the second mortgage program? Is it interest only? How long is the second mortgage required to be? Is it a minimum 5 years? And what happens if they're going to forgive it? All those kind of technicalities is where we would work with the employer to find out what is your willingness to, put forward for each employee. How much are you willing to spend? Because that will detail how the program comes about. We also work on preparing documentation that is generally signed between all parties, and that would be the lender, the employer, and the employee, because there is kind of an understanding that takes place place once that agreement, or we call it a tri-party agreement, is developed. And we use our expertise, our own attorneys, and they would use their attorneys, and we go through a process to come up with the agreement. It takes a little bit of time. Of course, we have statewide mortgage loan officers that are very happy to help with the consultation, but again, over the period of months or weeks, depending on how eager the employees are willing to move, they'll come up with estimate of payments, they'll come up with a closing cost, give them scenarios, give them the all-powerful pre-qualification letter, which never falters, right? And then they'll take them from application to closing. Bank of Hawaii will provide the loan servicing required for both pieces by way of payment coupons or payment, automated payment. Sometimes the employer says, I want them only to be paid by automatic payment, and so there's a little bit of work on our end to fulfill the demands. But when the employers are putting some money on the line, they have kind of that right to do that. We also, if necessary, will report when they're delinquent. We have an understanding as a lender to tell the employers when something's going bad, and that way they can, maybe intervene or what have you, because otherwise in the guarantee situation, if it goes bad, then that is real money spent by the employer. Darlene's spoken about all the benefits already, so I really don't have to go through this, but the benefits from the bank to the employer are that they rely on us to create, deliver, and maintain the program. The specialized loan, sometimes there's a property that is not that easy to finance, and it might be specific to the employer group. And so that situation will, get through all of the hoops ahead of time and present it to the prospective employees so that it's easy and clean for them to get their financing. And, of course, that's going to attract better qualified personnel if the employer is actually partially the seller, they can give a better price, that sort of thing. Discounts from the bank, they're always, for some reason, they always ask about that, and we're happy to comply and make it a collaborative effort. So that brings additional value to the member. And then the program that the employers offer will help mitigate the high cost of living and get them to bring the talent across the waters if that's necessary. Or bring home talent that left the islands, which we're very interested in going forward. Basically, the conclusion, I would say, is that partnerships really create the winning solutions. And it's just getting the partners together. So you as realtors or community members or workforce housing leaders, if you get the word out that the lenders are willing to sit down and try and work out some kind of program that might benefit an employee, I think that's helpful because there's not enough marketing going on with regards to that. Did I tell you that the rate is 3.75% at 2 points? That's crazy. I mean, as an employer, you could develop a program at this low rate in time, historically low rate. Prices have gone down a little bit, or a lot, in some areas. And, with kind of not too much money on the table, you can just create a program and market it as if you're the leader in bringing that value to the employee. Sometimes the employee just wants the guidance, or the reassurance maybe that, hey, they have a job for life here at this great place to work, like AFLA, I want to move there and work there. I hear all these great things, I like Georgia. But basically, if we all come together doing, the credit crunch is not totally over. We work with Hawaii Homeownership Center as far as homeownership counseling goes. We have the rates and the programs, the expertise, even the local, just portfolio, non-Fannie Mae programs to help make things happen for the employers. So we can just get to the table and talk to, you know, the hospitals and or even the small attorney firms, things like that. I think that's a good way that we can continue to support the workforce housing initiative here in Hawaii. If you have any questions, you know where to find me. Most of you